Morning. It's August 15th, Thursday. Market movers today. Pretty interesting economic data out. We had initial jobless claims last week down 15,000 to the lowest level since October of 2007, which was pretty close to the peak in the real estate market here locally, and obviously the stock market was at a much higher level at that point than we are at today. Unemployment is obviously a bigger problem today as well. We also had CPI, both the core number and the ex-food and energy number up 0.2% for the month of July. Year over year, CPI up 2% if you look back 12 months for July, and that's up from 1.7% for the annual period through June. So it's interesting because the Fed is targeting 2% inflation, so we're basically right in the ballpark. And this is that catch-22 I've been talking about. Any positive economic data, for example, the initial claims number coming down, gives the Fed the opening they need to justify tapering, because they can say, hey, unemployment's going the right direction, and we're not having as many people filing for unemployment claims, so therefore we don't need the stimulus anymore. We can cut back, and that's really not helping the market. So they're sort of in a bad position, because if the economy does good, that's bad for the stock market because people think they're going to taper. Obviously, if the economy is not doing good, despite the fact that they're pumping a bunch of money into it, that's not good either. So they're in a tough spot. But just as far as investments go, we're looking at a stock market down over 150 points so far today after being down yesterday. So looking to shape up to be possibly one of those days where we're down 300 to 500 points, which, as I've been saying, is exactly what we need to get the correction underway. We really need, for the health of the market, we need the market to correct, to bring valuations down and give people real valuable information, real current valuations that make sense, that are compelling, that make people want to come back in and invest, to have a good risk-reward relationship, which I don't think we have right now. So more to come, but so far off the open, down over 150 points.